Hello everybody. Firstly, I'd just like to welcome you to this special webinar where we'll be talking about metals, their recent movements, and the factors that can influence price movements up or down. My name is Sasha and I'm a financial analyst from the research department at Fortrade. I'm really pleased that you're watching our webinars. If you have any questions, please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now, first off, we'd like to introduce you to what we call a market opportunity. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions and based on historical evidence. This can relate to daily trading, weekly trading, or monthly trading. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that involves a pivot point and support and resistance levels. It's important to understand it's solely your decision on whether you trade on market opportunities or not. So here's an example of a very recent market opportunity. You can see some fundamental analysis on what's going on with gold. You can see this is a uptrend opportunity over a weekly period, since our analysis suggests that gold will increase in value. At the top you can see some geopolitical events and fundamental analysis that can influence the commodity. For example, the part on the crisis in the Middle East. When using a market opportunity, it's vital to look at the pivot point on which the calculations are based. In this instance, if the price reaches 1275 that you can see on the left-hand side of the screen here, this shows the right moment in our estimation for opening a trading position, had you chosen to trade on this opportunity when it was active. You can see below the trend direction and the time period. It's also important that you know how to use the stop loss and take profit options. You have support and resistance levels further down. At these points you can put a stop loss and take profit, and on the right hand side of the screen you have calculations. If you close the position using take profit, you can expect these kinds of profits at these resistance levels in green. If the price is going against you, you can potentially have a loss of the amount at those levels which are in red. Finally, profit and loss calculations are based on a one-lot trading volume. So, what metals can be traded? Well, the most popular metals are gold, silver, palladium, and platinum, and they can all be traded by investors. I will explain each in greater detail, but if you want to trade a safe haven asset, gold may be the best option. Other instruments such as silver, palladium, and platinum tend to see more swings in price or more volatility. So let's break down the instruments. First, palladium. Most palladium comes from the US, South Africa, Russia, and Canada. The most important and largest use of palladium is, as most people know, in catalytic converters that are used on cars which reduce pollution emissions. The motor industry amounts to some 60% of demand for palladium, so the price of the metal is very much connected to the production of cars and connected issues such as national government regulations to reduce pollution emissions. So you can see the palladium price over the past year on the graph there. Over the past year, palladium has seen some of the most volatile swings since the end of 2015. As you can see on the chart, palladium prices bottomed out in August last year and pushed to record highs until the end of March this year, when a sharp drop of around 15% occurred in a correction that investors believe was due to the fact that prices were too high. But analysts believe that the outlook remains relatively bright for the precious metal as the market remains tight. However, fears over a global economic downturn that would affect palladium demand has affected prices. as has trade war concerns. Platinum. Platinum shares some similarities with palladium, but the vast majority of platinum is mined in South Africa and Russia, which means that the metal is open to cartel action, which is supportive on platinum prices. Any disruption to mining in those countries, such as industrial action seen in South Africa recently, can help to drive prices higher. As with palladium, demand for platinum comes mainly from automotive catalysts, followed by jewelry. This means that prices are determined by car sales and production numbers. So let's take a look at platinum over the past year. As you can see, platinum prices dropped last year in August to hit a 10-year low of below $800 before bouncing up and down again. In the most recent period, platinum has been negatively impacted by weak demand for jewelry and catalysts in diesel power vehicles, with some analysts not expecting an upturn until next year. However, other analysts feel that platinum has fallen below its market value and may bounce back in the short term. You can see on the chart that the price tends to bounce higher from $790 levels. Palladium and platinum prices are quite closely connected, but you should remember that platinum, unlike palladium, is used in catalytic converters for diesel cars. Diesel has fallen out of fashion in recent years amid health concerns, and more recently, scandals at Volkswagen, BMW and Daimler, which attempted to cover up diesel emissions, have affected platinum. According to most investors, the outlook for platinum isn't as bright as with palladium, but since prices are historically low, there is likely to be a bounce back sooner or later. Silver and gold. Well, gold is an investment that many investors have traded at one time or another. Familiarity is the reason why many traders feel comfortable starting off by trading with gold. Gold is considered a safe haven investment. Gold is also good to trade since there are less factors to consider compared to other instruments. So you can see some of the factors on your screen here. Gold prices are more likely to rise when interest rates are lower. The dollar and gold tend to move in opposite directions since gold is calculated in dollars. In times of economic difficulty or uncertainty, gold prices tend to move up, whereas when the economy is doing well and stocks are rising, gold prices may move downwards. Gold prices may move in the opposite direction of the stock market. The dollar is also used as a safe haven. It's rare that all these conditions will combine, but if two or more are in play at the same time, it may be a good option to trade gold. So let's take at gold prices over the past year. As you can see from the chart, gold hit a low point in August last year when alternative investments such as stocks were recording highs and the US economy was powering ahead. Gold hit its recent high point in February amid fears that the US economy was slowing down and that the trade war would not be resolved quickly. Let's provide an example of current conditions using these rules I outlined a moment ago. The US Fed's interest rate is historically quite low at 2.5%. The dollar at the time of writing is trading not far from a 2-year high. At the same time, economists are worried about a global slowdown, and there has been a breakdown in trade negotiations between the US and China, and new tariffs are set to go into effect soon. The stock market is volatile at the moment, having hit an all-time high earlier this month. More recently, it hit close to a 1-month low. The first point about interest rates is slightly supportive of gold. Additionally, some analysts believe that there may be an interest rate cut before the end of the year. On the second point, a strong dollar pushes gold prices down. The geopolitical uncertainty caused by the trade war should support higher gold prices, but the dollar has also been used as a safe haven asset during the trade war. Some overlook the value of silver and its own advantages. Like gold, silver is driven by market demand, and also like gold, it tends to move in opposite directions of the stock market. There are a few advantages potentially making silver a better investment though. At the same time, silver is more volatile than gold. This means that a quick-thinking investor can make more money trading it, although this also means that if you are not well informed, there is a greater chance of losing your money. Despite the slightly higher risk and reward, silver is considered a safe haven investment compared to most instruments during market instability. Investors tend to invest both in silver and gold in times of recession or a market downturn, pushing prices higher. Silver is vital to many industries, so strength in the global economy tends to mean higher prices since demand for silver should be higher. Buying silver is counting on the strength of emerging countries, some of which experience prolonged political instability. Rather than keeping their savings in currency, some prefer to invest in silver or gold to protect value. This supports silver. On the other hand, silver might fail on a stronger dollar and a greater slowdown in China and India, since demand for silver from these countries is relatively high. Just to give you an idea of how silver is trading in a historical context, the current price is close to a yearly low. This doesn't necessarily mean a bounce back may happen soon, but it's worth considering when investors will decide silver prices have bottomed out and will start buying again. Well, I hope you found this webinar useful. Of course, at ForeTrade we'll be following metals and all other instruments and the factors that influence their price very closely. Please get in touch with the Senior Account Manager for further information. Until next time, goodbye, and please join us at ForeTrade again soon.